Hi, my name is Beverly Bolnick, National Sales Manager at NMP, and I would like to welcome you to National Mortgage Professional Magazine's webinar titled Cole Taylor Mortgage Case Study, Transforming Business Execution, sponsored and presented by Sapiens. I would like to thank all of our webinar attendees for taking the time out of their busy days for this very valuable and informative webinar in our ongoing series of webinars. We have two presenters on today's webinar. First, we have Alan Holstinsky, Senior Vice President of Strategic Initiatives at Cole Taylor Mortgage. Alan has over 23 years of technology experience, primarily in the mortgage industry. He was the founder and CEO of West Pole, Inc., a company that specialized in IT strategies and solutions, and was included in Mortgage Technology Magazine's Top 100 Vendors list in 2003 and 2004. With West Pole, Alan drove the vision, design, and implementation of InterFirst's MOAI system, the first web-based application for wholesale lending. Before joining Cole Taylor Mortgage, Alan was Senior Vice President of Web Technology and Strategy for Citi Mortgage. In his current role at Cole Taylor Mortgage, Alan is responsible for setting and advancing technology strategy. He has established a business process engineering team to execute key components of that strategy, including decision modeling. Our second presenter is Janet Eakes with Business Owner Financial Services at Sapiens Americas. Janet's role at Sapiens is to assist in expanding the company's business decision management system presence. Janet brings nearly 30 years of management and operational experience in the financial services industry. Prior to joining Sapiens, Janet served as the Chief Operating Officer of the Municipal Securities Rulemaking Board, MSRB, and as a Senior Vice President for Mortgage Operations at Freddie Mac, where she worked for 20 years. Before we get started, I just wanted to let everyone know we will be sending out a copy of the PowerPoint presentation from both of our presenters, as well as a recording of this webinar, so you don't have to furiously take notes. You will be receiving a copy. And also, if anyone you know missed the webinar and they did register for it, they will also receive that as well. So anyone who registered for the webinar will be receiving that. It gives me great pleasure to turn today's webinar over to our first presenter, Alan Holstinsky.
Thanks very much, Beverly. Thanks to everyone for joining today, and also to NMP and Sapiens for giving me the opportunity here to talk to you all. This is the first time that I'm actually giving a presentation like this in a bathrobe, so it's a little weird here at the office, but anyway, I'll get through it, I think. To start with, I just wanted to give a sort of a high-level overview of what I'll be covering. The presentation is taking a look at how Cole Taylor is approaching our current environment, specifically around how to automate our processes here in a way that gives us a better competitive advantage, specifically with a focus on business rule execution, automation of business rules. I'll be going through sort of 4 areas here, a little bit of background about the company, what we were looking at in trying to figure out our software architecture, which, as I said, has a strong focus on that business rule component, what it looked like to adopt the tools that we chose, and finally what we've learned in the process. So to start with about Cole Taylor Mortgage, Cole Taylor Mortgage is a division of Cole Taylor Bank. Cole Taylor Bank is a fairly old institution, well established. Cole Taylor Mortgage itself is pretty young. We opened in January of 2010 here in Ann Arbor, Michigan. The management team, however, has been working together for quite a long time, or the bulk of it in any case. As Beverly mentioned in the bio, I worked with InterFirst, which was part of ABN AMRO Mortgage Group, to create the MOAI system. And later, after I had sold that company, went to work for ABN AMRO Mortgage. And many of the managers here at Cole Taylor Mortgage came, the senior management, and in fact the staff came from ABN AMRO Mortgage Group. So we've known each other for a long time. Many of us have worked together for up to 20 years. In fact, my first job in the industry was working for the president of the mortgage division. We have grown quite quickly in the last 4 years. We're in 43 states, lending in 43 states. InterFirst was a wholesale operation, and in fact was at one point the top wholesale lender in the country. ABN AMRO Mortgage was a top 10 lender consistently. So as you can see, we're heavily wholesale weighted, 1,300 TPO accounts, but we have a focus on retail as well with 45, and I have to say about 45 retail branches because we keep opening them and I can't keep track. Just in terms of the numbers, $6.5 billion in originations in 2013, which was a 27% growth from 2012. And in general, even with the ups and downs in the market, we have been fairly consistently picking up market share along the way. We also recently opened our servicing center, and we have about $20 billion in unpaid balance in servicing as of the end of the first quarter. So just to give you an idea of the kind of change we've been through in 4 years to get to this point, and the kind of growth and the size, the scale of what we are doing. And we have our eyes, of course, set higher than that. So everything that I do at Cole Taylor Mortgage is about getting us up in that to scale. Our bank, established in 1929, as I said, well established. It's a Chicago area bank, 6th largest in the area, $5.5 billion roughly in assets. Primarily known for commercial lending. It did not have it didn't have a mortgage division before we opened this division. They did do mortgages on a small scale for their retail customers, retail banking customers. In addition to the commercial lending and mortgage, Cole Taylor has had a strategy the last few years of expanding rather diversifying its offerings. So asset-based lending, equipment leasing, residential mortgages are 3 examples of those. And you may have seen in the news, we do have a merger in process with MB Financial, which is a $9.4 billion bank, roughly, in assets. So we will be, in the end, right around $15 billion, which is a little less than triple what Cole Taylor Bank is now. So we're looking forward to what headroom that gives us in the mortgage division in particular. All right, so when we opened the mortgage division, it was quite an interesting time, as anybody who's been in the industry knows. Really rather unprecedented. After the economic collapse that we had major regulation changes coming, and at the time we opened, they hadn't all come in yet. We didn't know what they were going to look like. The market has been very volatile. We know in the mortgage industry that we're highly cyclical, but this went beyond that. There were our folks in secondary marketing were seeing shifts in pricing from one day to the next on a scale that they had never seen before. So that was unsettling, to say the least, and it made it so that we didn't know necessarily what we would have to cope with as we were waiting to hear what the regulation changes were going to be, and as we were watching the changes and shifts in the marketplace. For me, also, being the one who needs to lay out the technology vision, the state of the technology in the industry itself is a challenge. The mortgage industry isn't particularly known across the board as being, really advanced technology. And the way that technology has developed has been a bit monolithic in that systems banks generally go for large systems, and that kind of ties the hands a bit of a technologist. We always have the challenge of differentiating our product. To a consumer, a mortgage is kind of a mortgage, and generally everybody tries to provide the best service, and that's the way to differentiate. A little bit on price, that tends to be, of course, a lot more difficult. So there was a question for me in putting together our technology platform: what could we do to differentiate ourselves in the marketplace? And the uncertainty out there continues. with the economic recovery, we don't know what's going to happen necessarily with the economy. We know there are more regulation changes coming, and then there's the big question of the GSEs. The market share has been shifting from very top-heavy. The top lenders have less market share collectively than they used to, so things are spreading out a bit. The differences between banks and independent lenders, the differences among the channels, wholesale nearly dried up. It became a much smaller percentage of the overall industry volume, and that's been coming back a bit. And any of it could change the next time a big regulation gets put out there. But the way we tried to look at all of this here is that all of these challenges, the flip side of the coin is, of course, the opportunity that if we can react faster to those changes than others and better than others react to those changes, then we can come out ahead. So there's an opportunity in that, in all that shifting. So as you see in the orange box there, we have to react fast to get that advantage, but I don't know what those changes are going to be. I don't know what I'm going to be aiming for. And so I don't know exactly how we're going to need to respond. So in putting together the technology platform, the idea was to be as flexible as possible, to be able to react to anything that comes down the pike. So in putting together the platform, we launched an initiative here called Atlas to establish what our architecture would be. So when we started out 4 years ago, we needed to get going quickly, and we were able to do that. We took an LOS, loan origination system, that we knew would not necessarily scale us to the size that we needed to be eventually, but we were able to get up and running very quickly with that LOS. So we sort of bootstrapped ourselves that way, but we knew that that wasn't the end solution for us. So in this program, to create the architecture, I boiled down, in my mind, what applications consist of in general, and what are the big pieces that we would need. LOS, you need to have a place to actually process the loans, but the parts of the application, the workflow, orchestration, meaning who does what when and what triggers somebody to need to do a task, the business logic, which I bolded for the purposes of this presentation, since that's the main focus here, the business logic meaning what are the rules, how do we price, what are our product guidelines, what are our underwriting guidelines, all those rules that exist irrespective of who's doing what when. We have our underwriting guidelines, and you could put those same underwriting guidelines in 20 different companies, and they would have 20 different workflows to reach those guidelines, to comply with them. And then enterprise data, which needs to be shared not just in the LOS, but among our other systems, from secondary to servicing to accounting, et cetera. To make use of all of these components, we knew that also we wanted to have certain new skill sets in the organization. So we established our business process engineering team, and what they do is, they have a bit of Six Sigma type skill set there to model workflow processes and help streamline those. And then the business logic, also they're responsible for mapping out the centralized business rules. So the idea with the program overall, the biggest thing for me would be to increase the efficiency of the organization. That's sort of the magic bullet, really. If there's anything, it's inefficiency. Everybody wins with efficiency. The customers have better experience. There's a more consistent experience. There's lower costs, which can translate to better pricing, et cetera. So that's huge. It was important to retain our adaptability. We needed to be able to roll with whatever punches came down, and we needed to do it relatively quickly, and that's the nimbleness part. I needed to find a way to differentiate, so this is all addressing our, the challenges that we had on the previous slide. We needed to be able to differentiate. We needed to do that to maintain our competitiveness. Throughout all of that, there's always the aspect of managing our risks and reducing our various risks. But what most of these point to, the overarching theme for me in my mind is always enhancing that customer experience overall. So here's what we considered. How do we go about setting up our architecture. And at a high level, we saw sort of a continuum of options, and at the one end there is buy the traditional all-in-one loan origination system. So these are the monolithic types. This is the traditional way to go, and the benefits of that are that it's been done before. You kind of know what to expect. You know how it's going to go. You also have one vendor to talk to, but it does, really tie you to that vendor, and you're sort of very dependent on that one company, for better and worse. Similarly, you're relying on a lot of the built-in capabilities of that system for better and worse. And usually what I've found with the large LOSs is they have certain really strong points, and then there are certain points that are not so strong because they can't be the best at everything, and you have to sort of accept all of it together. So if the reporting, for instance, isn't very good, but the the pricing module is excellent, well, you kind of have to have both of those, and you don't have any choice about it. The other thing about it is if we go with an all-in-one solution, we can only really we're somewhat limited as to how much better we could be than anybody else. If we want to differentiate, but we're on the same system as someone else, then obviously we're going to look a lot like the other lender that's on the same system. At the other end of the continuum is to simply do it all ourselves, build it custom. And in fact, that is what we did at ABN AMRO, so we had some experience with that. But we also knew that we were a new entrant. We needed to go a bit faster than that to take on the opportunities that the changes in the marketplace presented. So we could have gone down this path, high cost and risk and the timeline. And add to the risk that we were a new company with a new IT department, new departments all around. We didn't have the organization in place yet. We were growing very fast at the same time. So we had all of that going on within the organization. That added a lot of risk as well to the option of doing this. It's hard enough to do when you have a IT team that's been working together for 10 years. LOSs, and projects still have a tough time succeeding. But when all of that's new and changing a lot, that really made that unattractive. That said, the largest players in the industry tend to have homegrown systems. So that is something of a reflection on the state of the technology in the industry as well. The final option that's sort of the in-between, the whole continuum in-between, is the buy and build. And to do that, take the best tools for each part of what we needed to do. Again, between the workflow and the rules and the data management and reporting and integration and all of that, try and get the best of breed in each area. Of course, that is complicated in that you have many different relationships to manage. And the way that those tools work together might not always be very smooth, but you do get the fact that you have less dependence on one vendor. If you need to swap out one piece of the puzzle, it's a lot easier to just change your reporting system than it is to change your entire LOS and your entire workflow system. So the high-level bullets of what we were looking at, the sort of criteria we were using. We wanted to take best of breed over an all-in-one solution. So as I said, we wanted to, if we're going to do reporting, we want to have the best reporting tool. When we're doing business rule management, we wanted that to be the best. We wanted to be standards-based. This is intended to help with that integration issue. If you have many independent vendors, if they can conform to standards, it makes it both easier to make the different pieces talk to each other, and it also makes it easier to swap a piece out if you need to. So that goes into the vendor independence versus the vendor lock-in as well. We wanted to, as we were looking at it, make sure that we were focusing our energy on the things that could give us competitive advantage, as opposed to the things that were truly the commodity pieces. So we weren't going to be building our own doc prep engine, because I've never heard a borrower say, I really like that lender, but I wouldn't go with them because their mortgage, the closing docs didn't look right. If there are errors, of course, sure, but the formatting of them wasn't as good as this other mortgage I had. That kind of stuff we tend to want to let somebody else handle. Scalability was going to be a big deal because we have grand designs. And this, the bottom right there, the not next to scalability of performance and manageability, that's my mini rant there. What we don't want is rigid tools with poor usability, delivering buggy end products that are murder to test and migrate. So that sort of encapsulates the frustrations that many of us have experienced with systems in the past. So specifically in the area of the rules, the things that we were thinking about, many of the systems out there now have business rules baked in, so to speak. But what the reality is the LOS vendors who have built their own rule engines start out at a disadvantage, because rule engines are, as a separate standalone class of product, have been around for quite a long time, and they're very mature. So the rule engines that are built into LOSs tend to be something like high school football players, as opposed to the other ones out there that are in the NFL, if I can use a sports analogy. The runtime performance and scalability of the top class engines you just can't be compared, and they tend to be easier to use in terms of modeling the rules themselves. And when we talk about business rules, essentially a lot of them boil down to a whole lot of if-then statements. If your product is a 30-year fixed and your occupancy is owner-occupied, then your maximum LTV is X, that kind of thing. So there's a whole lot of those if-thens. And if you have thousands and thousands and thousands of them, then together you need to be able to manage those and make sure that you've got them correct. So the rule modeling is really critical in all of that, in making sure that what you're doing is right and manageable. We wanted to have portability of the rule definitions, again, standards-based, so that we could swap rule engines if we wanted to. We need to, as an enterprise, have versioning and release management, just as a good practice to make sure that we know that we can roll things out in a smooth fashion. And as much as possible, test automation. That's a big benefit to reducing the risk of what you're rolling out, the changes that you're making. Test automation allows you to get so much better test coverage of what you're doing that is a key thing that the engines, the standalone engines sometimes offer that we wouldn't get out of a rule engine within an LOS. So as I was looking around to try and figure out what rule engine, having decided that we wanted a rule engine that was standalone, I was walking around at the MBA, seeing what the various LOSs had that was baked in and not really being satisfied with any of those. And then I passed by what turned out to be the Sapiens booth and saw someone, a man there, describing a rule engine and rule modeling. And as I stopped, he sounded very different, and I realized, wow, this is the real stuff. And what he was describing, it turns out that was Larry Goldberg of Knowledge Partners International. And Knowledge Partners defined the decision model, which is the methodology, to me, the next step in the evolution of business rule modeling. In the decision model, as opposed to managing large sets of if-then statements, essentially in rule bases, the decision model starts with a business decision that needs to be made. For instance, here's a loan. Is it eligible for this product that we want? And it breaks it down from there, which is a more natural way of looking at these things. Second, the decision model provides a rigorous methodology. So the way that you go about defining the rules is laid out in such a way that if you follow the methodology, you actually just intrinsically in doing that will prevent a lot of the gaps that can happen in collisions, and by collisions I mean rules that conflict with each other. If you have 1,000 if-then statements, you don't know if you've covered every possible scenario, and maybe you even run into this before if you're looking at a lender's product guideline matrix, that you have a loan that you don't have a line for. Your scenario doesn't fit on any of the lines in the grid, or maybe it fits on 2 of the lines in the grid and have different answers for what the max LTV is or whatever it may be. So the decision model helps prevent that kind of thing if you follow the methodology. The decision model also has the benefit of being a lot more readable and understandable than a lot of traditional rule presentations, essentially. And it also is separate from execution of the rules. You can use the decision model to model your rules, whether or not you're automating the running of those rules, and you get some benefit out of it. And since it's separate, rule engines could be created that could take the output from a decision model, and you may be able to switch between them. So it helped us in our reducing vendor dependence as well. This here is a sample of what a decision model looks like, and this comes from the Knowledge Partners site, and the link down there is down there below. And as you can see, this one happens to be an insurance example, but you need the decision at the top in the stop sign looking thing, determine policy renewal method, and below that a box that says policy renewal method. That the top line is the answer that you're trying to get to. What is the policy renewal method? And then below that are the things that you need to look at to figure out the policy renewal method. Is the policy pricing within bounds? What is the policy underwriting risk? And is there a manual? Are we doing manual underwriting or not? And then, if you know those three things, you can know what the policy renewal method should be. But what does policy pricing within bounds mean? Well, that's the next box down, and that similarly says, if I want to know, and I'm looking at you can see my box here, but play with the PowerPoint things here. Now I'm looking here. If policy pricing, if we look at the policy discount and the policy tier, then we can figure out whether or not the policy pricing is within bounds. But I need to know, how do I know what the policy discount is? And that's the box below, and so on. The things below the dotted lines are the things that we can't figure out with logic. They're just what's called persistent fact types, which means essentially data that we get from outside of the rule engine itself. Within each of these, underlying each of these boxes on the screen is a grid that looks a lot like the grids, many grids you might be familiar with. Okay, so having selected this as an option, these are how we evaluated TDM and Sapiens Decision, which, by the way, at the time was the only automation or the only environment that implemented the decision model that I had seen. And what we found was, well, we have best of breed. We could take Decision, which was the leader in decision modeling, match that up with a external rule engine, and get a much better result than using the, as I put in quotes, rule engines inside an LOS. We have standards to work with. We have vendor independence because of the standards and just keeping it the rule engine separate. We have the ability to create competitive differentiators because the tools are better, and we can get better results, and we can get them faster. We have scalability. Again, using an external rule engine, we can get a best of breed. That helps with that. The decision tool itself, as it happens, was built in a way that recognizes what you need in an enterprise, a larger enterprise, to manage business rules effectively. So those tools are built in. The governance, the decision tool helps enforce the decision management methodology, the decision model methodology, so that we can make sure to get all the benefits of the methodology itself and ensure that we're following the rules and that our quality of rules stays high. So bringing it in, it's nice to have the ideas, but we had to get some buy-in to get it in. We have, first of all, I broke it down like this. We need to make sure people believe in business rules as an approach. We need to make sure that people believe that these tools and methodologies will help the decision model and the decision tool. So the buy-in for the business rules are laid out for management what we were trying to achieve, and made sure they understood that, and then showed where business rules fit in that architecture. So having that picture fairly clear was very important. For decision, the TDM and decision, one thing that helped for me a great deal was the pedigree of the the designers of the decision model, including, besides Larry, we also have Barbara Von Halle, who I was aware of her decision rule or business rule work in the 90s. Barbara Von Halle is a mathematician, and she brings that rigor into the methodology. I don't know if everybody knows, but relational databases such as SQL Server and Oracle, those are all based on mathematical concepts, and that solid underpinning is what makes it these things work so well in so many situations. The other thing in looking at decision was all of those things that made it enterprise ready really helped bring that along, to know that we would be able to manage the tools that manage the rules that we were building through these tools. So what we did, to be sure, is we made a proof of concept. For a month, we brought KPI, Knowledge Partners, and Sapiens in for a month, and we did a proof of concept on a real business decision that we had. And it was a painful one at the time. The new GFE rules were relatively new, and we were really worried about cost to cure and so on. So we created a rule set as an example to validate that the GFE was filled out correctly. And in a month, we were able to do that. And with it, we just created a simple web app to just invoke the rules and see what the result is. And with that, we were comfortable that this really was able to deliver on the things that we needed out of it. So we formed our business process engineering team with our analysts. We added a data architecture role because, as it turns out, that enterprise data is tied closely to workflow and business rules. And we kicked off with a 6-month consulting engagement to get our team trained, get our processes laid out, to do a set of decisions with the help of Sapiens and KPI, and establish how we were going to go forward with our design principles and what our standards were going to be. And we had also engaged IT as much as we could there, and worked out over time. We worked out the collaboration, which is actually quite a challenge with IT, and we continue to work on it. So why did it work for us? That executive management support is pretty important. The fact that our team worked together for so long in terms of the management team meant that I didn't have to do quite as much work there. I had a lot of pre-buy-in, so to speak. We had our architectural concept, and what I found is that the clearer we've been able to make it what that concept is overall to the team, the better things go. There have been times when people didn't really feel like they understood where we were headed, and the more they understand that, the better. We have a dedicated effort. We don't have people who are splitting roles, who are part-time decision modelers. They are dedicated to it, and they have experience in working with processes, improving processes, although they're not IT people themselves. And having mortgage industry knowledge is pretty important there. The kickstarting, the executive management support, of course, made that possible to bring in, have a 6-month engagement. And we really focus on the processes that we're following, the roles that we play, and who needs to do what. So try and wrap this up because I'm going a bit over. We've learned that this is still new ideas here with the decision model and decision itself. There's pluses and minuses there, of course. Getting to market quicker, getting the benefits of all this in being a sort of a thought leader in this way, and joining other thought leaders basically is got its benefits, but that means that there are also there's lessons that we have to learn without examples before us. However, what I have found is that both Sapiens and KPI, really are looking actively for feedback, and they are really listening to us as we give feedback on these things and what's working and what's not with the tool and with the model itself. We found that although this helps us handle the complexity of our logic, it doesn't eliminate it. Basically what this approach does is lets whatever the complexity of the rules is, we allow ourselves to limit to that complexity, and we don't have any artificial complexity being added in by the fact that the rule isn't structured, or sorry, the rule engine and the rule modeling environment isn't structured well enough, so that we have to sort of bend over backwards to make things fit. And we've learned that really nothing beats that collaboration with IT. If we have a group creating centralized business logic, well, it's never going to get used unless it gets called from other applications, and we need IT to help us figure out what should be in the tool and what shouldn't, what should be in rules, what should be in code, and then to actually implement all these things. So some of the challenges with that are our business process analysts are essentially requirements analysts and developers. Business rule modeling is a subset of requirements analysis. Essentially, it's a new technique to capture requirements. And when they put the models into the decision tool, they are in effect creating software. We can export their models directly into a rule engine and run them. However, our business process analysts are not requirements analysts, and they're not developers. That's not their training. That's not their background. So it's still really important to get people involved who do know those roles. And the third bullet, lack of clarity in how to collaborate in overlapping roles, has caused defensiveness and friction. I think we might have some members of our team on this webinar today, and they're probably nodding in agreement right now that until you can figure out how all of this works, everybody wants to do a good job, but they're not sure how to go about it. That can really get frustrating. So it is important to focus on that. Tendency to lead with the solution, that's the old adage, when you have a hammer, every problem looks like a nail. So we need to include this in our toolbox, but we were trying not to create rule projects, but rather there's a project to solve a business problem, and using decision and a rule engine may be part of the solution. And then difficult to coordinate the resources across the teams, again, because we created a separate business process engineering team with a different manager than the IT and the software development team. It can be difficult to keep their priorities aligned, and therefore to keep resources on schedule working together the way they need to be. So those are the things we've had to work through and are still working through. But what we've seen so far, we've been able to model a lot of logic in our environment. And just by doing the modeling, we got benefit. We found, as I was saying, when you look at a product eligibility grid and you can't find the line on the chart to match your scenario, we found a couple of those things in our guidelines. And we had rules that were being run in our current LOS that we found that, in fact, nobody knew exactly what was going on in there necessarily. There were parts of the system that were opaque, so even if we wanted to change them, we didn't know what we were changing from. So this helped us figure out where those gaps were. We've been able to use the automated rules, specifically with product eligibility rules, to generate reports for our underwriting managers and detect when somebody has approved a loan that they shouldn't have because they didn't meet the guidelines. And we'll also be able to do that same kind of thing in the same way for our QC department, both pre-closing and post-closing audits, to ensure that we can look at a broader set of loans and test them against the rules to see what matches and what doesn't and why. Another benefit is that when we run the rules against a loan, we can log and trace back what were the rules at the time the loan was approved or run through, whatever rules that we may need to trace back to. So for instance, if an investor, sometimes questions come up about how did a loan, why did a loan get approved when it did, what were the rules at that time? We have a way to go back, or if an auditor comes in and says, you approved this loan, how does that work? It doesn't fit your guidelines today, and we can maybe show what the rules were at that time and then be very clear about that. There we go. So I won't spend too much time here because we've talked about most of these things. We do think that we've been able to start down the road of getting things out better and faster, essentially. We've had to do it through the challenges of not necessarily of the approach not being an established approach, but it's still, we've been able to see the benefit, and it still holds a lot of promise for us, and I'm excited to see what else we can do with this approach. So thanks very much for listening, and I will turn it over to Janet Eakes of Sapiens.
Thank you, Alan. Thank you for sharing your use case and experience with us and being very open and honest about it. It's a great story, and Sapiens is very pleased to be able to contribute to achieving your business goals and IT transformation. I'm going to take just a few minutes to explain a little bit further about what Sapiens Decision is and how it accomplishes those benefits that Alan has presented today. I'm going to start with the problem of the past, the problem of traditional methods today. Let me tell you a little bit, about Sapiens first, because many of you may not have heard of us, but we've been around since 1982, publicly traded, and we're a leading global provider having offices around the world of software solutions in the financial services industry. Lots of experience in rules-based architecture and rules engineering, and are leading the decision management space and enterprise capabilities, which I'll be going over, and we have very proud of our financial results. So let me now talk about the complexity in today's technology and the problem that we solve. In the traditional methods of discovering business directions and policies and regulations, validating the understanding of those directions, and then embedding them across in operations and processes, in data, in application code and rules, we typically make that transformation and that discovery through narrative documents, through matrices that include numbers and words. We interview subject matter experts, business analysts, transform their understanding into these requirement documents that get passed off into IT, and code is generated or process flows are generated. Those handoffs and those ways of discovering, documenting, and validating the business intention is very inefficient, very prone to inconsistencies and gaps, as Alan has stated, and leads to very complex and inaccurate results. This is the dynamic we want to change. If you multiply that across the organization as we apply business directions and regulations to multiple applications and multiple channels across the organization, these handoffs, these interpretations, different interpretations, lack of standards and rigor such as the decision model that's based in mathematical principles, the lack of that kind of rigor will result in a very complex infrastructure in the end. Next slide. Where the inconsistencies, the difficulty and inefficiencies in implementation, the discovery of problems and errors very late in the project life cycle, and the ability to recreate and find errors, much less identify when change happens in the source directives, where all the changes need to happen across the applications. It's very, very difficult, if not impossible. We lack the transparency and the certainty in implementation that is required in today's mortgage environment, and it only gets worse over time. Now let's add to that. Let's look at the different channels by which we interact with the consumer and with our third-party providers, the different processes based in different organizations across the life cycle of the loan, and that complexity and certainty over execution and being able to tie results back to business directions becomes all the harder. Customer experience varies and is inconsistent, and business analytics is next to impossible. Plus, the data coming in through those different interfaces lack consistency, and it only gets worse with time. We want to solve that problem, and that's the promise of decision. As Einstein pointed out so many years ago, we can't solve our problems with the same level of thinking that created them. So we've got to change that whole dynamic I just described, and that's what decision and the decision model does. We're going to create within decision the source of documenting, validating, managing, reusing business direction as business logic based in rigor and principles, managed by decision, and then we're going to deploy it across the operations, across the different interfaces and channels consistently. Because of the rigor and the structure of the decision model and the capabilities within our tools, we can actually produce code for any application regardless of the language of the application, and achieving that technology agnostic state that Alan has described in his 2B architecture. Next. Decision is a full component of enterprise capability, managing communities of logic where there are differences and reuse as intended, a glossary that maps the terms in the decision model to technical databases and maintains that traceability from the modeling platform through to execution. Visual workbench, automatic testing and generation of test cases, automatic deployment, and we have an execution engine should that be needed. Next slide. So in the process, I mentioned the complexity within an infrastructure, and I referenced technology, but also in processes there is a benefit. Typically, processes try to flow out the if-then rules and logic, and they become overwhelmed and difficult to maintain as well. With decision and decision-aware process modeling, which is we also support, we're going to simplify processes. We're going to identify at which steps of a process a business decision is required or a data quality decision is required, and we are going to document that as a decision model. Because of the structure of the decision model, we're then going to generate code directly to a rules engine or an application. The speed and accuracy improves dramatically. Sapiens Decision and the repository of the business logic in decision and the traceability within decision becomes the central point of truth for the organization and the means by which business and IT and operations come together and quickly have one understanding of execution and ability to validate the execution. Next slide. So we're going to go from vague, obscure, unverified, incomplete, variable, and uncontrolled execution to just the opposite of that very quickly within days and weeks instead of months and years. Next slide. My final slide here is just to show you some of the benefits that we are seeing as we implement decision and the maturity with decision over a year takes place. We are seeing big cost reduction, big improvements in data quality because the data quality and standard logic is also established and deployed from decision. Much more increase in scope. So with the same resources, you get business direction and policies, underwriting credit policies, et cetera, implemented much faster, as well as regulations such as qualified mortgage. I talked about the speed and the ultimate reduction in IT costs and coding and recoding applications in order to get the business results. With that, I'm going to turn this back over to our host, Beverly, and we'll take some questions.
Okay, great. Thank you both, Alan and Janet, for such great informative presentations. We are getting some questions in. We only have time to take a few of them. So if we don't answer your question, we will make sure that someone from either Sapiens or Cole Taylor gets back to you. Probably someone from Sapiens will get back to you about your questions. So if you have questions, please submit them in the question area on your GoToWebinar screen, and we'll try to get to as many of them as we can. The first question is for Alan. How do you anticipate this change impacts customer experience at Cole Taylor?
Well, there are direct ways and indirect ways. Obviously, any time process goes smoothly, that's better for the customer, whether it's a broker or a consumer for our wholesale and retail channels. Indirectly, as we get more efficient, there's impacts on our potential pricing. We have more room to compete more on price as well. But when I was at ABN AMRO, we did some study of what brokers value in particular, and of course price is there. But the thing that really stood out for me was consistency. They needed to know what to expect, and this helps us be much more consistent and know that we're getting consistent answers out.
Okay, great. Janet, this next question is for you. What applicability does decision have beyond lending?
The decision model and decision management in general is being implemented very rapidly across every financial institution and every aspect of the operations. Within mortgage, it applies to underwriting, loan processing, servicing, compliance, security administration, and the secondary market sale of loans to investors, etc., and then across financial institutions in banking and investment banking and the application of regulations, mortgage regulations, and other general banking regulations.
Okay, next question is for Alan. Do you intend to expand use of decision management in Cole Taylor?
Certainly. We've sort of only scratched the surface of the things we could do, and as Janet alluded, there are applications of this not just in the operations and in loan doing the loans themselves, but we could be using this in accounting and HR and really anywhere where you have an opportunity to automate something. So we certainly do expect to expand the use of it.
Okay. Janet, does Sapiens replace my existing rules management system?
No, Sapiens Decision can enhance rules if there are rules applications or rules engines currently implemented. Sapiens is the more efficient, more accurate, more comprehensive way of generating the code or the rules for those applications, and Decision can do that for any commercial rules engine, as well as we can create adapters for proprietary rules engines. Should there be a need for a rules engine or a new rules engine, we also have an execution environment that is so we can meet those needs as well. But Decision does operate independently with any execution engine.
Okay, great. Next question is for Alan. How are you handling ongoing recruiting and training of BAs in the new approach?
Well, the recruiting, this is new enough that you can't really put decision modeling and expect on a job posting and expect to get people with a lot of experience in it. So we look for proxy skills that are similar. So with our business process team, understanding process modeling in general means that you can better understand where logic fits into a workflow. We make sure that when people come in that they're getting appropriately trained, and we're getting to the point now where we can be training. We have our own internal training is possible, and when we need to, we can always call on Sapiens and Knowledge Partners to come in and provide additional training.
Excellent. Okay, we have time for one more question, and then we're going to wrap it up. But I see some more are coming in, so don't worry, we will be able to answer them via email, or we'll get in contact with you somehow to answer them. The last question is for Janet. Does decision handle process modeling as well as decision modeling?
Much like with rules, applications, and engines, decision does interface with business process modeling tools. We always create business logic by also understanding the process of executing business decisions, and so there's always a development and understanding of process along with decision. For some decisions that must happen in a simple process and are tied together, decision can execute in the process, but in the more complex business process workflow engines, we interface with and are coordinated with those applications.
Okay, great. Well, I want to thank again Sapiens, first of all, for sponsoring this webinar, and Alan and Janet for such a great presentation today. Again, as I said, if we haven't gotten to your questions, we will definitely have someone answer you within the next few days. And we should be having the PowerPoint and a recording of this webinar sent out to you by tomorrow, hopefully. I can't see why not. It should be. So with that being said, thank you everyone for attending, taking time out of your day to attend the webinar, and thanks again to the presenters, and I hope everyone has a great rest of the day.
Thank you.